Welcome back to the channel, guys. We're back with another video, and today we're talking about DeFiTuna and how to use leverage when providing liquidity to DeFi liquidity pools on the Solana network. As always, if you enjoy the content, make sure to give it a thumbs up below. We're going to be sharing lots of good insights here today. And if you're not familiar, we did a video about DeFiTuna a little while back on the channel, but DeFiTuna is a relatively new protocol and they continue to push new updates. And so the interface now is more advanced and allows you to play around with lots of different numbers and permutations when trying to think about how you want to deploy liquidity to generate passive income and yield. And so that's what we're going to look at in today's video. So you can head on over to DefiTuna.com. I'm currently on the trade page and my wallet is already connected. Again, the prerequisite here is that you need to be using a Solana-based wallet. You could be using something like a Phantom or a Backpack wallet for that purpose. In the trade area, you can see how you can set up all of your trading. Again, in the pools area, it gives you a breakdown of all the individual pools that you can be providing liquidity to. DeFiTuna are adding new pools all the time, and it is worth noting that the pools that you're actually deploying into are Orca native pools. So Orca is one of the leading dexes on the Solana blockchain, and the pool opportunities on DeFiTuna are allowing you to deploy into those Orca pools with leverage. Okay, given the fact that you're able to use leverage on DeFiTuna, that means they also have lending and supply rates. Okay, you have to pay a borrow rate for borrowing capital in order to lever up your positions, and you can get data on all of the supply and borrow APYs over here. And similarly, even if you just want to supply Solana to earn extra yield, you can be generating almost 14% supply APY from simply putting your Solana over here on DeFiTuna here in May of 2025. So let's go back to the trade area. I want to dive deeper into this interface because it does look a little bit overwhelming on first glance, but we're about to break it down. The first thing you're going to want to do is select the actual pool that you want to provide liquidity to. For today's example, we're going to be looking at a pair for Solana USDC on the Orca DEX at the 0.04% fee tier, and you can see here it gives us the data for this pool. It tells us the actual volume going through here on a 24-hour basis. It shows us the TVL of the pool, and it's telling us here that we can use up to 5x leverage for this particular pool opportunity. Okay, let's click on Sol USDC, and the next thing I need to do, again, the prerequisite here, as I mentioned earlier, is that you've got your wallet connected and that you've got some capital or funds in your wallet. I've got a couple of open positions here I'm going to share in a moment, but as you can see, we need to specify how much USDC or Solana we want to put into the pool. Let's just use an example where we're going to supply 10,000 US dollars into this particular liquidity pool, and we're going to supply 0 Solana. When you do this type of setup, the protocol will actually split this $10,000 into the correct deposit ratio that you can see down here in order to enter you into the pool. The deposit ratio will also be a factor of the range that you set, which we'll look at in a moment. Okay, leverage is the next thing we want to think about. Okay, the point of the video today is to show you how you can safely use leverage with a position like this. Again, you have the ability to add up to 5x leverage. In my opinion, that is going to be too much leverage to be using for a pool like this. So let's go with an example where we use up to 2x leverage. Okay, you'll notice as I change this as well, the payoff curve or the P&L curve over here is changing in real time to reflect my actual position. The next thing you need to specify is the ratio in which you want to borrow the assets in order to lever up your position. So because we're using 2x leverage, we have to borrow a combination or either Solana or USDC in order to lever up this pool. In this particular option, I'm going to select 100% USDC. The reason I want to do that is because I have a bullish bias on the market at the moment, and I believe Solana is going to continue to move up in value over the coming weeks and months. Okay, given that bullish bias, it means I do not necessarily want to be borrowing any Solana in order to lever up this position. By borrowing more Solana, I'm technically hedging myself against the long exposure of the Solana I have in my pool if I am to borrow a certain portion of Solana at the same time. Okay, so again, because my bullish bias is that Solana is going to increase in price, I only want to be borrowing USDC, and I don't want to be on the hook for Solana and having to repay Solana if Solana moves up in value. So I hope that is making sense. The next thing we need to do is define our range, okay? You can see here, it's possible to drag these buttons here in order to define the actual range for the pool. Instead of doing that, what I prefer to do is just type in the min and max range down the bottom of the screen here. Again, we've got plenty of videos about setting ranges and rebalancing ranges on the channel. You can check those out as well. I'm going to put something here, maybe something around 160 on the lower end and something around 184 on the upper end, okay? You'll notice that that is giving us, roughly speaking, 6.35 plus 7.72. We're looking at something around a 14% wide range from bottom to top. The price right now is sitting at $170.96 per Solana. And the other area I wanted to draw your attention to on this particular chart here is the liquidation price, okay? You can see the liquidation price for this specific position with me using 2x leverage in this setup is $101.60. Of course, the more leverage you use, the closer that liquidation price is going to move towards the existing spot price. So for example, if we were to lever that up 3x instead of 2x, you can see that the liquidation price now shoots all the way up to $135.48, which gives us not nearly as much buffer as having the liquidation price all the way down at $101. And again, you can use this to play around yourself to figure out and determine what liquidation price you're comfortable with given the buffer that you want to set for your pool. So let's go back to something maybe like 2.2x leverage. That brings the liquidation price to $110. Again, I think we're pretty far away from that right now, and we would have plenty of time to react to this position if Solana was to begin dropping towards that $110 level. The other chart I want to draw your attention to is the P&L curve up the top of the screen here, okay? So this is telling us essentially that if we deploy into this pool with this specific range, and if price was to move up to the top of our range, we would actually be in a profit of about $439. What it's also telling us is that if the price was to drop to the bottom edge of our range at $159 or $160, we would be in a loss of $1,087. But the feature that I really like here on DeFiTuna is that it allows us to toggle and play with the time in range variable. Okay, of course, the whole goal of liquidity provision is for us to stay in range as long as possible so that we can earn as much yield as possible. And of course, the yield and the profit that we generate is going to be impacted depending on how long we stay in range. So we can scale this up, for example, to something like let's scale it up to 14 days here. So if we were to stay in range for about 2 weeks, you can see that if price stays exactly where it is at $170, technically speaking, we're going to earn about $1,543 in fees and profits in a 2-week period based on this particular position. Okay, you can see that if we go out of range on the upside, we're going to be plus 1881. And if we go out of range on the downside, we're actually still going to be in a profit of $357. So what I really like about this is it tells me exactly the price that Solana would need to get to before I would actually begin to be in a loss. So even if it goes out the bottom of the range here, you can see that technically speaking, we don't end up getting into a loss until the price of Solana drops below $157. Okay, you can scale that all the way up to a full month. So again, it's telling us now that if we stay in this range for a full month and price does not move, we'll have a profit of $3,022. Upper end is $34.88, lower end is $19.65, and we technically wouldn't be in a loss until Solana's price got all the way down to about $144. Okay, I hope this is making sense, and it just gives you the ability to run simulations and think about how you could be earning some pretty good fees by providing liquidity with leverage on a specific asset pair. Okay, I will give you another caveat though, because the caveat you have to remember is that the volume going through the pool is going to be different every single day. There's going to be periods of high volume, there's going to be periods of low volume, and the volume will directly impact the amount of fees on a percentage basis that you're generating. So let's look back down here at this particular chart, because what this is telling us is that if we deploy $10,000 into this pool with 2.2x leverage, we're going to be generating $108 in fees every 24 hours, which is the equivalent of 1.08%. Okay, you can actually see that literally just updated as I was looking at it to 1.16%, and that's what I mean. You can take these projections to give you an idea, but because the volume is going to be changing on any given day, you have to take them with a pinch of salt and understand that they will vary over time. It is also worth noting that this 1.16% is the actual yield you're generating on your owned collateral, okay? The number it's quoting here, the 1.16%, is what you're earning on your $10,000 deployed, okay? Again, because we're deploying $10,000 with 2.2x leverage, that means that technically we're getting $22,000 of exposure into this pool, but the 1.16% that we're generating is on the $10,000. So I hope that's clear, and I hope that makes sense for you when you're reviewing the numbers for yourself. The next thing I want to look at very quickly is limit orders, okay? One of the great features about DeFiTuna is that they do actually allow you to set limit orders so that even if the price drops out the bottom of your range, you can have a limit order in place to close the entire position before it gets anywhere near this liquidation price. So in this example, we only have a liquidation price on the lower end because we're only borrowing in USDC. And what I can do here is I can define an actual limit order on the lower end of my range. You know, the bottom end is about $160. I could define a limit order at $150, for example. And you can see it brings in this lower limit order onto the graph, which means it'll close out my entire position by the time price gets down to this area. The other thing I like about this is you can clearly see that even if we stay in range for a month and then it drops out of the range on the downside, I'm still actually going to be $891 in a profit by the time that limit order triggers. I'm still going to be in the green. Okay, I hope this is making sense, and this can also prevent you from getting liquidated. You want to avoid liquidation at all costs, and obviously, if price was to get all the way down to $110, you're going to be liquidated, which means the protocol, in this case DeFiTuna, is going to take your collateral to repay the borrow, i.e. the leverage that you've used for this position. Okay, let's look at a couple of real examples very, very quickly. I know all of this is a lot of information, but I've got two different positions open here right now on the chart. You can see I've got two pools with overlapping ranges. I'm using about 2.2 to 2.3x leverage. There's about just under $5,000 deployed, and with the levered up capital, I've got a little bit over $11,000 worth of exposure. You can see I've got two different ranges set. One pool is from 165 to 185. The other pool is 171 to 190, and you can see the fact that we've got a lot of good information about all the pool and the breakdown of what's happening here. So let's run through each of these columns very quickly. It's showing me the size of the position. This is the total size, including my collateral plus my leverage. It then shows me the collateral only in the position. It shows me the deposited collateral. It shows me the debt that I'm accruing on the levered up capital. This is very important and something you want to calculate and factor in when assessing your P&L, because you are paying interest on the capital you're borrowing. So remember, we looked at the lending page earlier. If you're borrowing USDC, you're going to be paying the borrow rate for USDC and accruing debt or accruing interest over time the longer you keep the position open. Of course, you're going to be generating significantly better fees with 2x leverage compared to not using any leverage, and it's obviously going to be more than enough to cover the interest you're accruing on the borrowed capital. It shows you your liquidation price, which is pretty obvious. It shows you the price at entry. It shows you the lower limit and upper limit orders if you have them configured. And then it shows you the yield that you're generating on each of those pools. It shows you the price range, which we looked at, the overall P&L, and the time in the pool. Okay, so I hope this is making sense. I hope this is clear. And you can actually see that they're introducing new features all the time here on DeFiTuna. Again, you can check out the trade history, hopefully in future. You can also do auto compounding and configure your pools to auto compound your fees back into the pools so that you don't have to do it manually yourself. Again, they're introducing all these new features all of the time. I hope this video is making sense, guys. I've already spent 15 minutes talking here, so I'm going to cut the video right where we are right now. You could also provide liquidity to crypto pairs, so drop a comment below this video if you want to see a tutorial specifically for crypto to crypto pairs, because the impact of borrowing against those particular positions is a little bit different compared to Solana paired with a USDC stablecoin. So that's it for today's video, guys. I hope that is informative. Check out DefiTuna. Run some simulations yourself. It doesn't cost you anything to run these simulations. Check out the numbers, play around with the leverage, get a feeling for the P&L that you could expect over the course of a given time frame with, a tight range, a moderate range, a wide range, and you'll get a feel for where is going to fit you and your strategy best. I hope that makes sense. I hope that was valuable, and we'll catch you in the next one.